Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. That would be the best thing to do right now. Lock in those rates for another 4 years. What if this is a game where the goal is to miss? All of the countries and central banks are working together, as far as I can tell. Central banks are not free to do what they want. All of them are working together. You can see that Janet Yellen and Jay Powell are working together to run the TGA and the reverse repo. Japan is the same. Everyone is doing the same thing, even in China and Europe. A well-known financial expert and co-founder of Real Vision named Raoul Pal talks a lot about how blockchain technology can change everything. He says it's a revolutionary network that gives people a new kind of asset that's not like regular financial instruments. Pal brings up a lot of important points like the need for decentralization, new ideas in banking, and ways to invest. Effects on the world and change that could happen. Blockchain technology is likely to be used for more than just money as it gets better. It could also be used to handle the supply chain, check people's identities online, and in healthcare. One way to invest in blockchain is to buy cryptocurrencies like Bitcoin and Ethereum. Another way is to invest in blockchain-based projects and technologies in a more indirect way. Investors can get into this new class of assets and help shape the future of digital finance by learning how to use and understand the blockchain network. Paul's ideas show how important it is to know about these changes so we can make the most of the chances they give us before they end. Paul. It's been on my mind for a while that I believe we are now moving from macro crypto spring to macro crypto summer. Now, some people mix it up with the season itself. That was on Twitter just now. I say no because it can be broken down into 4 stages of the asset-driven cash cycle. In this stage of the cycle, the forces that are lowering prices are still present, and growth is still slowly picking up. That sounds a lot like macro utopia. Why? Because that makes central banks and states more likely to add cash. Plus, this code cycle is about both the election cycle and everything else. You know what lawmakers do right now too? They want to give kids candy. And they tend to keep stirring into the next year, so they're also stimulating. At that point, when the economy as a whole was starting to pick up speed, the ISM measure was still below 50, which means it was still moving slowly. There are a lot of good signs for the future, and the liquidity has been good for a while. Taking a look at it another way, that gain means that Wall Street has recovered, which is liquidity. New life has not yet come to Main Street. When we all make more money on Main Street, there's a little more money floating around. That's when all of these gains start to flow into the markets as well. That's why things aren't just driven by cash in the basement. It's driven by real business money, which has been pretty scarce in a lot of ways. That's how the crypto summer works in general. Now is the start of the crypto summer. It's also what the banana zone is built on. Things start to get really crazy after that. Since about 2008, all of these have done pretty much the same thing. The presidential election tends to make prices stay flat during the election because no one knows what it means, and then it's all over. Markets go crazy no matter what happens. The expected result doesn't matter if it's a shock. Because of this, the election cycle has been very common in both stocks and coins. That's where the cycle is now. So we're just in that zone where we have this beautiful chart pattern that brings together the things that don't have as much network. Traction or network usage has dropped a lot, but things are beginning to get better. I believe it will only be a short time before we see the next move. That's also likely to happen at the same time as some other market events. And I believe that the Japanese should step in with the Fed's approval, as that will help the business cycles of both China and Japan. That needs to happen soon since the US dollar is too strong right now. The Fed must also cut rates, which is the other thing that needs to happen. I also saw you talking about inflation on Twitter today. The real rate for inflation is 1.82. Core CPIs are now going down sharply, but rates are still at 5.5. With the lag it has, it doesn't make sense. Because they put everything on the short end right now, they won't hit inflation, which I don't think bothers them. You can refinance debt at lower rates. Janet Yellen has been putting out short-term loans. That is, the more rates go down, the more she can get back into the 4-year pattern. You should only work on 2 things: inflation and unemployment. These 2 things happen after the business cycle. When it comes to the owner equivalent rents part of CPI, which is the big part of it, they are 15 to 18 months behind. So even though the ISM is bottoming today, that doesn't mean that doesn't bottom until sometime next year. That's why the Fed is always cutting into the second year. They're following the lagging signs, which are the things that drive down CPI, which is why they're always late tightening. Unemployment, you're now in the part of the cycle where unemployment goes up. I don't think it will go up by a lot, but I think it will go up to 4.5% or even 5%. When you think about how far behind unemployment is, It's about a year behind. That's why the Fed keeps cutting rates, even though the economy is going to start getting stronger. It's a strange world when the EISM is at 55 and the Fed is still dropping rates like crazy. This happens every time. No one can understand what's going on. They're both behind because they only look at those two signs. It's 9 months from now, but Julian Batella and I live in the future because we use financial conditions and financial conditions drive the ISM. It has been getting a better score for a while. For the most part, they should be cutting now. Do you think they might make the mistake that causes them to cut too late, or do you still think they'll be here on time? Raoul Pal, Sesame, Credits, Credi, and everyone else in Europe, China, Japan, and everywhere else has to. The best thing that could be done right now is to lock in those rates for another 4 years at the lowest rates possible. It seems like there might be a game going on here, which is to miss the target. I have seen that all of them, the states, the central banks, and the central banks are working together. Central banks are not free to do what they want. All of them are working together. You can see how Jay Powell and Janet Yellen run the two. Both the TGA and the reverse repo are fully working together. Everywhere in Japan, China, and Europe, people are doing the same thing. If they're doing it late, I think they mean to because they're not so stupid. They can see the same type of cars. Everyone at the Fed does worse work than I do. They're not forced to do it, they've chosen to do it. It looks like Yellen went to China twice. Why does she need to be in China? It has to do with their debt renewal cycle because they need dollars because their whole real estate market borrows dollars. Their money is running out. There is a lack of dollars around the world. It began as Silicon Valley Bank, and now it's all part of Credit Suisse. This is a big part of the euro-dollar market, Credit Suisse. The Japanese banks are the most important part of the euro-dollar business. In other words, they are lacking in money. The dollar-yen starts to go down. Yellen then visits China twice. So Yellen needs to make this little dance happen. The dance makes fun of Japan to get the Chinese to do something. China doesn't want to lose value. Janet doesn't want to lend money to the Chinese in swap lines directly. So she's going to sneak it through the Japanese banks and get the Japanese to step in. That's how I see it going. China, on the other hand, would have agreed to the other thing, because Janet sells more bad bonds than anyone else in the world and needs them to buy bonds. She tells him, I'll get you the flow. We know that the euro-dollar market is short on supplies. We'll give you the cash in a number of different ways. Your treasure chests will get bigger. Everyone can leave. Then there are the trade deals that try to tell the US that it can't have such a big imbalance. We will not grow enough if everyone does not change how they are here. That growth is good for everyone. Every week, a dollar is what makes the world go around. Every time the economy goes up, the dollar goes down. Putting money into developing markets is a bad idea. China needs it very much. The US needs to sell its things abroad so that people will buy them. China is basically in a slump, so they won't buy anything. All of this is going on when the business cycle is at its lowest point. Things seem like they'll be fixed. The only way I see it getting fixed right is for the Fed to shock the market by cutting rates and lowering the interest rate difference, which might happen in July. It seems like you said today on Twitter that you think July or a strong signal is coming. Raoul Pal, then give the Japanese as much as they want. Co-founder of MicroStrategy